Welcome to today's webinar. I'm so excited that you've all joined us, and I love this topic. And I'm so excited to be joined by Dana. How long ago did we meet? We met some time ago, and when I immediately met Dana, who is leads the investor relations team and so much at Madison. She went beyond self-directed IRA, was talking about creative deal structure and all the things that matter in our business of investing. So I've always been incredibly impressed with you, Dana, and Madison, and how you support your clients. And it goes well beyond just opening a self-directed IRA account, although that's an important piece. So thank you for being here. Thank you for sharing what you're going to share with us about, really optimizing this and how to, and there's so much out there. So thank you for being here.
Absolutely. Liz, thank you so much for having me with your educational sessions. And I'm just always happy to be part of the investor community because you have built something really powerful, something a lot of people don't talk about, women in real estate. And especially now there's a huge, and we spoke about this when we initially met, there's a huge transference of wealth to women. And how do we use that? Not only build our personal wealth, but generational wealth. So I love this topic. People call me crazy, but I eat, sleep, breathe self-directed IRAs.
Something we do before I give it to you, Dana, is I really would love to welcome everyone on here. There's a lot we can do with our time, so we don't take that lightly. Thank you for being here. And we want you to get the most out of this time together. That's why this is live. So I'd love for you to put in the chat box your name, where you're calling in from, say hello. We have a very engaged community, so I need you to say hello. That's important here. But most importantly, what do you want to get out of our time? Like, what is your intention for this call? Because when you join webinars, you join anything, a meeting, a conversation, a webinar, go in with an intention, go in with something that you want to get out of that time. Because if you go in with nothing, you end up leaving with nothing. So my encouragement to you, and it's something that I do with calls and meetings and webinars, is I go in with a very clear intention. So I would love to encourage you to put that in the chat, your name, where you're calling in from, and what do you want to get out of our time? And I'd love to see that. Hey, Michelle, one of our Strive members, good to have you on here. She's expanding into the US. She's expanding into the US now that everyone's chatting, and wants to know how to help people invest their IRAs to invest. Okay, great. Awesome. I think you'll get that. Hey, Melinda from Nashville. I literally just spoke to somebody from Nashville. I'm coming there in October. So, but you know very little and you want just a general overview. Great. Gina from Oklahoma. Good to have you here, Gina. You want to know about using your IRA for a real estate invest. Unsure of your first steps, best practices. Yes. Marcel. Hey, Marcel from Phoenix, Arizona. I know you too, my dear. Your intention is to learn how to utilize your IRA to invest in real estate. Very cool. All right. Awesome. Some great intentions. We're going to break about 15 minutes in. So we say what's landing, what's coming up for you, what are you getting out of this? So we make sure no one's doing something else or in far away land. We want you to be 100% here because we are 100% with you in wanting to get you this information. So, so thanks for being here. And the floor is yours, Dana, and I'll interrupt you in about 15, 20 minutes, okay?
Perfect. I love it. Thank you so much, everyone, for joining us today. A quick little background on myself as well. So Dana Udumulla, I'm the head of strategic relations at Madison Trust Company. By trade, I'm a financial analyst, and I started my career in Wall Street, stocks and bonds. And then I stumbled onto alternative investments. And not just any alternative investments. I stumbled onto alternative investments through your retirement accounts, especially IRAs, something that no financial professionals really taught when we are trained to be financial professionals, whether it's financial analysts, whether it's CFAs, CPAs, no one talks about this very niche topic that you can use your IRA and go beyond Wall Street, go beyond stocks and bonds, and actually invest into asset classes that you have expertise in or believe in, such as real estate. And my expertise in alternatives go far beyond real estate. We do private equity, precious metals, cryptocurrency. Some of my favorite clients, they do Arabian racehorses. They do yachts, marinas, broadways, because they really understood how do you utilize an IRA and really maximize the power associated with an IRA? And hence why now I've made it my life's mission. Let's talk about that niche area, that subjects that we don't talk about, that we're not told about, especially when we are planning our wealth. That is, how do we use our retirement accounts, IRAs, to really truly diversify, get out there and invest into, and right now one of the hot topics, real estate. So I'm really excited to do this training session with everyone. Let's see. Perfect. First things first, let's start with the basics. Before we get on to how to invest using an IRA, how to, fund your deals using an IRA or fund someone else's deal using your IRA, we want to understand the basics of a self-directed IRA. Now, normally, if I'm speaking to a group of people right in front of me, I'll ask a question about now, how many of us have a self-directed IRA? Honestly, Liz, let's ask that question in the chat. How many of us have a self-directed IRA right now? Like, if you can put it in the chat, that would be great. Perfect. I'm seeing Marcel, I do. Gina, no. Michelle, me. Perfect. Now, here's the other question. Is your self-directed IRA with a custodian like Charles Schwab, Fidelity, and is the investments within your self-directed IRA, ETFs, stocks, bonds, traditional securities? Let's see. Vanguard, okay. Yes, traditional securities with Fidelity. Thank you so much. I love the engagement via chat, guys.
And Dana, quick question. We have Sabrina asked a question on Q&A. Does what you're saying here, does it also apply to to SEP IRA, or would I need to roll it into another specific type of IRA?
Correct. So self-directed IRAs does also refer to SEP IRAs. So traditional Roth, SEP, simple, all in one can be considered self-directed IRAs. Perfect.
Okay,
Perfect. Cool. Alrighty. So there is one person I can actually see that person does have a self-directed IRAs, because I'm seeing a private deal that they mentioned. Perfect. Fantastic. So for majority of our attendance today, we said Charles Schwab, Fidelity, Vanguard, right? They are considered self-directed because the custodian has provided you some buckets of traditional stocks and bonds, and you choose from that. But the true definition of self-directed IRA is a retirement account, an IRA, where you can invest into alternative real estate asset classes I mentioned. We're talking real estate, we're talking private equity, private credit, hard money lending, precious metals, cryptocurrency. Now, we are governed, self-directed IRAs are governed by the same regulations, such as standard IRAs that's governing Charles Schwab and Fidelity. We provide the same tax advantages, the same tax advantage umbrella, but with that one key difference. We actually provide you true self-direction so that you can choose and invest into that investment that you're passionate about and believe in. And in this case, for the last, how long, Liz, like many years, decades, people have been getting into real estate utilizing the self-directed IRA. And for one key reason, because real estate has that beauty of appreciation. And now imagine if you're able to use your IRA to invest into tangible property, a deeded property. So an actual house, a building is the asset within your IRA. The appreciation of that real estate will be tax deferred, or my favorite, and we'll talk about this a little later today, tax free. So this is what a true self-directed IRA is, and this is the 3% of finance that no one really talks about. If you go to some of these institutions that's out there, big names, and ask, can I invest into real estate using my IRA? The answer will be no. Not all of these brokerage, these big firms get into these alternative sides, and that's why you have to work with a specialized custodian to be able to get it. And not just any custodian. You want to work with a custodian that understands what your needs are and also understands the compliance and regulations associated with self-directed IRAs, so we are protecting your retirement money. Why my clients really, and anyone I've ever spoken to, uses self-directed IRAs is few reasons. It is, oh, there we go. Few reasons, right? the tax advantage. Now, Liz, you asked a great question before. Is SEP and Simple part of self-directed IRAs? Yes. In general, when we are talking individual retirement accounts, there is 5 types. We have the traditional. Traditional is what we consider pre-tax. So taxation is deferred up until the time of retirement. Then we have Roth. Roth accounts are very, very special accounts, and just between us, those are my favorite accounts, where you pay taxes up front when you're contributing to the account, and then your capital gains, profits, or appreciation grow tax-free given the right criteria. And then SEP and Simple accounts, SEP and Simple IRAs are really for small business employers and employees. They're fantastic, especially for investing into real estate. And then finally, inherited accounts. So yes, if you inherited an IRA from someone as a beneficiary, you can roll that over into a self-directed inherited IRA as well. But within that, all these types of IRAs, you're able to invest into different alternative investments. But what are the benefits? So we just discussed the tax advantage. With real estate investments, the appreciation of it is very important, right? And we want to protect that. We want to really minimize that tax burden or tax liability, and self-directed IRAs are a fantastic tool for that. Diversification, something all of us face this year, and Liz, I think we spoke about this a little bit too, is the ups and downs of the economy, the volatility of the stock market. One day it's breaking records, the next day it's really down. Sometimes it's market sentiment. It could be one message that got sent out that's hurting everybody's retirement account. And I actually know a lot of people during the downturns, they lost millions. During the upturn, it was fantastic, but for them, their biggest personal issue with that was just they weren't comfortable. It was stressful to know I wake up one day, Donna, my retirement account is almost nothing. The next day, it's back to normal. True diversification helps you moderate that. It really helps you diversify the risks too, and be going beyond Wall Street and mitigating that market volatility. And that's where self-directed IRAs come in. Asset control. We have a lot of people who like to have a little bit more control of their retirement accounts. We no longer want to just put it on our financial professionals and be like, okay, you manage it for me. I'll just want to see the bottom line at the end of the year. Sometimes when we take control, especially because we are the professionals at what we do, you guys are the real estate professionals, you guys have the expertise in this. Imagine if you can control your IRA to invest into what you have expertise in and what you know you can gain returns in. And of course, finally, my favorite one is long-term wealth building. Whether it's for you personally to have a comfortable, richer retirement, or just generational wealth so that you're able to pass this on to the next generation, to your beneficiaries, self-directed IRAs are a valuable tool. I must mention here that in no way, shape, or form am I telling you that your entire retirement account must be self-directed IRA. Diversification is really, really important. The days of 60-40 portfolios, it's not a thing anymore. We now need to think beyond 60-40, right? We need to think how much of our actual retirement portfolio should we put into real estate, right? Especially if you have a great deal. These days, who wants to pass by a great deal, right? Is it 30%? Is it 40%? It's really dependent on your financial goals. But in general, I always encourage everyone that part of your portfolio should always be alternative investments so that you're diversified across many different asset classes. Myself included, I have stocks, I have bonds, I have some real estate, and I have some crypto because I want to always try to invest into certain things that I believe in. And of course, precious metals. You can never say no to precious metals, especially when inflation is coming up, right? Perfect. Now, tax advantages. I get this question a lot, and that's why I decided that I really want to talk about this before we move on to the fun stuff. And the fun stuff is, how do I invest into real estate deals using my IRA? How do other people invest into my deals using IRAs, and the do's and the don'ts, right? But very important that we have a foundational knowledge of self-directed IRAs. So now We know what a self-directed IRA is. We know what we can invest in a self-directed IRA. We know what types of self-directed IRAs are there. And now what's important is when we are deciding on the strategy, especially if you're talking to your investors, right? Guiding them through what the strategy is going to be important. Tax deferred growth versus tax-free growth. Traditional IRAs, SEP IRAs, simple IRAs are tax deferred, which means you do not pay any taxes up front. You're able to contribute. So to contribute to a traditional IRA, if you are 50 and younger, it's $7,000. If you're 50 and older, is $8,000. Same for a Roth IRA. For SEP IRAs, because it's more business plan related, the contribution limits are much higher at $69,000 and $70,000, or 25% of total compensation. Simple IRAs are around $16,500. But if you have 401ks, right? If you have 403bs, if you have qualified retirement plans from previous employers elsewhere, there is no restrictions. You're able to roll over your funds from all of your qualified retirement plans into an IRA because they're already retirement money. The contribution limits only matter if you are using your taxable income right now. That means, like, say if you have your W-2 income or your self-employment income, you're trying to contribute. That's the only time contributions come into play. Traditional IRAs, SEP and simple, tax deferred, which means at this time you're paying no taxes to contribute or use your IRA. So let's take this for instance, right? Let's take $100,000. You have it in your traditional IRA. You purchased a property for $100,000. Few years later, it appreciated. It was a great time. So 10 years later, now it's at $500,000. At the time of retirement, say 10 years later, you are now retiring and you're taking either income out or you're taking the property itself out from the retirement account to yourself personally, which is called a distribution. You will be taxed at your current income tax level at that time. Because why? At the beginning of your investment life cycle, when you contributed to the IRA, you started investing, you were not taxed at any part. And that's what we call tax deferred growth. You're deferring the taxes up until the time you decide to take it out of the tax advantage umbrella or take distributions out. Once you are at 73 years old, you are required to take minimum distributions out from your IRA, right? So that's tax deferred. But up until the time of the withdrawals, there is no taxes on the rental income you might earn from your property or the capital gains while the property is held within the IRA. It's a great strategy. A lot of the people use traditional IRAs as their, foot into the door of the world of self-directed IRAs and alternative investments. But my favorite one is the tax-free growth, right? Who doesn't like the term tax-free? Because personally, that's my favorite term, tax-free. A little story. I actually love speaking about this. I'm sure some of us are familiar with Peter Thiel. Liz, any familiar with the name?
Yes, sounds very familiar. I'm not remembering the where or how.
It's a very famous name that was going about a few years ago, and I'll explain why. So Peter Thiel is one of the initial founders of PayPal. Back in 1999, he invested $2,000 using a self-directed IRA into PayPal. Now, back then, PayPal, private company, you all know what happened a few years later. It IPO'd. He got millions back into his self-directed IRA. He didn't stop there. Peter Thiel is one of those people who knew about this strategy from the very beginning. Funny story, was actually from a friend who told him to do this way. So he was educated about this strategy. So once he IPO'd, what he did is he actually kept his Roth IRA. He didn't cash it out. He didn't take the money out. Instead, what he did is he rinsed and repeat this strategy. Then he decided, what are some other startups I can invest into that is similar? He continued to invest his millions into other private company startups. One of which is, we all know Palantir Technologies, right? Fast forward to 2019, $5 billion in his Roth IRA, one of the biggest Roth IRAs in the world. completely tax-free. Now, Peter Thiel is about to hit 59 and a half, and I believe a few years, he doesn't have long, but as soon as he passes that line, 59 and a half, his Roth account is completely tax-free. So $2,000 in 1999 to over $5 billion right now. I don't even want to calculate that capital gain there, but imagine how incredibly rewarding and satisfying it is to know that he was able to use this exact strategy that you and I have access to, but create such a massive wealth, right? Now, it's not just the strategy. Peter Thiel was also, he invested in what he knew. He knew the startup world, he knew the private equity world, and that's what he did. And because of that, using that Roth strategy, he was able to really maximize the benefits of a self-directed IRA.
Love it. If you don't mind, Dana, do you mind if we take a break to see if there's any questions or?
Of course, perfect time actually.
Because obviously tax advantages is one of the most beautiful things when it comes to real estate. Active, passive, right? That's one of the greatest things. So any questions I want to do is a quick check-in. Questions, what's coming up for you, something you're learning, just put it in the chat box. The more we hear from you, the better, so we can make sure what we're sharing is landing and helpful, and you're going to use what you're learning. That's always really critical. So we'd love to see that if there's any comments, questions, or anything that's coming up for you personally, especially those who have an account.
Absolutely. And then anything else you guys might want me to touch on in the second half of our session as well. Because this is a lot of information, Liz. It's always a lot of information when we talk about self-directed IRAs, but I really, really want you guys to use this session to ask all the questions you might have.
You know, I think something that would be as we see what others are thinking, but I'm looking at these two choices, right? So the number one thing I'm thinking about is what situation would cause me to go down the path of more of a traditional versus a Roth? Like, what would make me go one or the other? And it may not be that simple, Dana, but is there a question I'd ask myself to help me direct me a little bit to which one might make more sense?
Absolutely. So great question. Definitely, it depends on, are you thinking about, do you know that your income tax bracket is going to increase in the next few years, right? If so, perhaps starting a Roth IRA right now might be more beneficial for you than later, because you're paying the taxes in that initial contribution up front, right? But also there's something called modified adjusted gross income. After you hit a certain income level, you're not able to contribute to a Roth IRA directly. So again, if you're thinking your income is going to go beyond that, it's best to have a Roth IRA right now, because Roth money is precious money. Versus, let's say you want to do this, but right now you really don't want to deal with the tax burden. Then perhaps traditional IRAs are better, because you want to defer the taxes to a later time and you don't foresee that being an issue. So the first thing I tell people is sit down and look at your financial situation and be really honest with yourself, right? We all love to have $5 billion worth of tax-free money, right? But right now, in this current moment, what is your financial situation and what's your goal? What are you trying to get to? Then, once you know those two, here's where I'm at right now, this is where I want to go, then making the choice between traditional and Roth is great. Now, don't worry, if you decide to do a traditional account, it's never too late to convert to a Roth. There are some fantastic techniques to get a Roth account, even if you pass that modified adjusted gross income, and it's called a backdoor Roth conversion. So you are able to open up a traditional and then later on convert it to a Roth account, pay the taxes up at that time, and then moving forward, everything will be considered Roth money. So great question, Liz. So I do see we are getting a few
now
questions.
Everyone's asking questions. So I'll fire, what are they called? Fire them to you. I don't know what I'm trying to say here. I'll give you the questions. I'll be your assistant here. So Michelle, I'm sure this will be covered. In Canada, our RRSP can be invested in arm's length transactions, not our own real estate. I think this is different with the IRAs.
So I'm just gonna throw that question back at Michelle. Michelle, are you asking if with US IRAs, because IRAs are very specific to US, right? If you can invest in your own real estate or not, right? So you're able to invest into real estate, right? You can own tangible property or get into passive real estate deals using your IRA through a self-directed IRA. However, you cannot invest into your own personal property. For instance, you can't buy your personal property through your IRA. You can't transfer your own personally owned real estate into your IRA. You do have to have an arm's length distance between your personal investments and your IRA investments.
Okay. An anonymous attendee. How can we use this strategy for our children?
That is actually a fantastic question. Lesser known fact, you are able to have custodial accounts. That's IRAs for children. So if, of course, parents have different ways, right? I have a client, very young baby model. So they are earning income, right? Fantastic. So they're able to contribute, even if it's that $7,000 a year, and then they're able to, and the parents are able to direct that into funds or even real estate deals, passive real estate deals on their behalf. So absolutely consider custodial accounts for children, especially teenagers who already have jobs or internships, which will be fantastic because it's going to grow.
I have like personal questions that I'll put on the side because now I'm like, but I'm not going to make this all about Liz and what Liz needs. So we'll keep going back to I do have questions, but that's the sidebar. Sabrina, can the property be held jointly? I'm assuming that might have been when you gave an example, but
Correct. So property can be held jointly. I've seen property being held jointly between two different types of IRAs, traditional and Roth. I've seen property being held between friends, like multiple owners. I've also seen property being held between spouses. Now, spouses, property being held between traditional and Roth, it's a little tricky. We will cover that later. There is something called disqualified individuals. You yourself is considered a disqualified individual to your IRA. So is your spouse, so is your kids. So in this case, if you are jointly owning the property with your spouse through your IRAs, the percentages of ownership has to be adhered to a T. So if your husband's IRA owns 30% and your IRA owns 70%, all the income and expenses needs to be split 30-70 between the IRAs, and at no point can they commingle. If they commingle accidentally, for instance, the husband decides to pay the expenses using his IRA and the wife takes the income, that will be considered a prohibited transaction. So we want to avoid that, but absolutely possible as long as you're adhering to the regulations.
okay, cool. We're going to keep going. Got some great questions here. What makes Madison different from other SDI IRAs?
I love that question because the other thing I love more than SDIRAs, Liz, is Madison Trust. Madison Trust is very dear to my heart, really, because at Madison Trust, we care about making retirement accessible and affordable. And the two key differentiators of Madison Trust is we excel at customer service. Whether it's even after this presentation, you guys don't need to set up a self-directed IRA with me. But if you have a question, you want to brainstorm some of your ideas, I'm always happy to pick up that call, answer that email, and see what are you thinking? How can I help you get to your goal, right? And that's not just me, that's everyone here at Madison Trust. Right behind me, this is not a screen. This is actually one of our locations. This is our New Jersey location where our executive team sits. And every team member at Madison Trust has that same mentality. How can we help not just our clients, just everyone get to their retirement goals? And of course, part of that is keeping retirement affordable. We don't charge based off on portfolio values. We charge a flat rated quarterly fee just because in this world, we realize that we can make money, but also leave a positive social impact too. So great question. Thank you for asking.
We'll put a link in the, I'll put it in shortly as you're answering the next question about taking a step forward and setting up a call with you and your team. And you guys have been super accessible and supportive. You're at InvestorCon. I know you engage with a lot of the women there. and you have a great team, not just yourself, but a great team with you too. So I'll put that link here in a moment. But Anne, you're asking about, you have a Roth with your Morgan Stanley broker invested in stocks. Can my traditional broker change my Roth to a self-directed account, or will I need to transfer it out to a different investment company? It's a good question.
Great question. So at Morgan Stanley, you're not able to do self-directed IRAs. We get this question all the time. So you will need to transfer either a traditional or Roth account to, like, say, us, a self-directed IRA custodian. Here's the thing, and you don't need to do a full transfer. So a common misconception, people think I need to transfer my whole IRA at my current custodian to a self-directed IRA. No, you do not. You can take the portion of the funds that you want to get into, like, say, real estate, just transfer that portion to a self-directed IRA and still keep your accounts at Morgan Stanley, the rest invested in stocks and bonds.
Okay. Let me see here. Janine, can I contribute to a Roth IRA if I file taxes separately from my husband?
Yes, you are able to contribute to a Roth IRA. Really, the contribution, the criteria is as long as you have income, you are having income for that taxable year, you're able to contribute. Beyond that, if you have 401ks, qualified retirement plans from previous employees, you're able to transfer all of that. We call it a rollover. Roll it over to your IRA as well.
All right. Gina, if I use it to purchase real estate and sell the real estate or profit from it, does the money all go back into the self-directed IRA?
Typically, yes. Once you purchase the real estate, you sell the real estate or just hold the real estate and the rental income keeps coming, the funds go back to Madison Trust and then your Madison Trust IRA, and you're able to reinvest it. Or if you want to use those capital gains or income to invest back into the stock market, you're able to do it. We do have a really amazing tool we call a checkbook control model. It's basically an upgrade to an self-directed IRA where if you want more control, so you don't want to keep sending the money back to Madison Trust, you want to be able to have the money so you can invest really fast. We set up an IRA LLC within your self-directed IRA, basically a limited liability company, Liz, where we beef it up with IRA provision so it still protects your retirement money. Yeah. We set up a checking account for that. So you transfer the money from your previous custodian to Madison Trust. We transfer it to your checking account associated with your IRA LLC. You're able to purchase and sell real estate. All the capital gains and income goes back into your checking account associated with your IRA LLC. And now you have that direct access, right? You're able to reinvest. You're able to do a lot of other things, which is fantastic. Caveat with that is we ask clients not to take money out for personal use because that is considered a distribution. At any time, if you need to take money out, please send the money back to Madison Trust and request a formal distribution. But if you're reinvesting, you have full control.
Okay, very cool. So many good questions here. Andrea, is one option better than the other depending on how old you are? For example, I'm 60, hoping to retire by 70. Am I too old for this strategy? Andrea, you're never too old. I'm just going to say that. Now, in terms of strategy, I'll defer to you, Dana. I just wanted to say that.
I second that, Liz. Andrea, you're never too old. And if anything, you're at that sweet spot right now. I'm just going to put it out there. I always recommend clients to speak with their financial professionals because at Madison Trust, we're passive custodians. We don't provide tax, legal, or financial advice. So always speak with your tax professionals. But I'll tell you from what I've seen, you're in something called a very sweet spot. You're over 59 and a half, right? So like say you decide to go to a Roth account. You already met one of the criteria, which is fantastic. Now you need to just have the Roth account for 5 years. And if you're planning to retire by 70, you have 10 years. Perfect time to get into a real estate deal using a Roth IRA and hold it. Because by the time you're retiring, you meet the criteria for that capital gains in your Roth account to be completely tax-free. Andrea, if I were you, I wouldn't pass this opportunity because not a lot of people get this opportunity where they don't have to wait for too long.
Great. Gina, does the IRA go under my LLC?
Gina, great question. It's actually the other way around. So IRA, your Madison Trust IRA is the first, right? You're the IRA account holder. Underneath the Madison Trust IRA is the LLC. So for the LLC, the member or the owner of the LLC is your Madison Trust IRA, and the manager is you, except you're the non-compensated manager. So your Madison IRA owns the LLC, and the LLC will give you the same protections as your IRA.
Right. And if I only have 1099 income and not W-2 income, can I contribute to a Roth IRA?
Yes, you're still able to contribute as long as during that tax year you are earning income. Here's another thing. If you're 1099, there are also other options, right? Outside of traditional and Roth, we have SEP and Simple. That's really for small businesses and entrepreneurs. And then something else is solo 401ks. So that's qualified retirement plans for solo entrepreneurs. So something, we do have a sister company that specializes in solo 401ks, but 1099 employees have a lot of resources and available options out there as well.
It's great. I think it did. Okay. Can SDIRA funds be used for short-term lending?
Yes.
It's great. It's one of the best. That's one of the best and most beautiful. As someone who's raised money over the years, it's one of the best ways to do it, because you're able to really optimize someone else's self-directed in your deals. I mean, Dana, you're the expert, but
Absolutely, Liz. It is. I agree with you. It's one of the easiest and also the most flexible ways. Both everyone involved, they're really happy with short-term lending, because one is people are having such difficult time with lending right now, right? In financial institution, restrictions are really hard, and things don't close fast because of that, because they take all their sweet time for that. Versus private credit, especially in the last few years, what I've seen is a huge demand for private credit using self-directed IRAs. So one of the things which we will be talking about next is how do you lend money out of your IRA, right? How do you structure that? But it is very simple and you're able to do it. The restrictions goes back to those prohibited transactions. You want to be careful on who you lend to. There are certain rules when it comes to that. You can't lend to disqualified individuals. For instance, the biggest disqualified individual person to your IRA is yourself, the IRA account holder. So you're not able to use your IRA to lend to yourself.
okay, awesome. I'm managing all these questions here. All right. So one other question here, and then I'll let you continue, but I think this is a great question. Any advice or suggestions for a stay-at-home mom interested in real estate with family, currently having only one income, who wants to build generational wealth by using a Roth IRA growth strategy via real estate? Any book recommendations? I think setting up a call with you and your team would be my biggest suggestion for you, but anything else that is top of mind, Dana?
That I would definitely, I'm sorry, Liz, who was the person who said that? What was the name of the person who asked that question?
Oh, anonymous. I don't know.
Oh, perfect. I would love if you could set up a call with me directly. I would love to just hear about what you're thinking and what you would like to, what your goals are, right? And then we can figure out. There's so many books, recommendation. I can't even think off the top of my head right now. But when it comes to just building generational wealth, and I know how important it is, especially as a single parent, you have children and it's just one income. Even putting a little bit away is very important. You're in a community here, InvestHer, that women support women. You have access to real estate professionals, deals that you don't get access to as the general public. What I suggest is start having some conversations with your fellow InvestHer community, right? See what are some of the deals you can get into, because some private deals, as long as you have a personal relationship, even if you're not an accredited investor, you're able to get into it. And even if your contribution amount is minimal, trust me, it increases. Short-term lending. Short-term lending is a great way to grow your IRA in the short time. So even if it's $5,000, $10,000, $20,000, $50,000, you are able to lend to people at certain interest rates. It can be secured, it can be unsecured, but you have avenues and ways of getting into real estate indirectly that will provide you returns, right? I have seen promissory notes anywhere between 12% to 20%, depending on what the loan terms are. So that's another avenue. And of course, this is not real estate, but it's a very trusted and true asset class, precious metals. The dollar is devaluing a lot. I think in 2025, $100,000 that was worth 100,000 in 2020 is now $125,000. So that's a 25% devalue of the dollar. Having precious metals in your arsenal of retirement assets is absolutely helpful. And of course, builds that wealth, not just for you, but also for generations to come. But love to have a conversation with you. Liz will definitely share my contact information. And also, if you go to madisontrust.com, you're able to set up a call with me as well.
Yeah, I'll just put it here if you didn't see it in the chat box. But this goes to Madison Trust and investors page where you can set up a call with Dana directly. So, and then the recordings are all on our YouTube page. So you can view that within 24 hours. And all of our webinars, all of our live trainings, podcasts, some great information in there for everyone on all the recordings. So two other quick questions. Janine, hey Janine, good to see you on here. You were at InvestorCon there. I had a nice chat with you after. Can I contribute with non-W2 funds, example, real estate profits?
So I have seen it happen before, but sometimes it gets a little tricky, especially if depending on certain things. So what I would suggest is definitely I would like to know a little bit more about that. Also speak with your financial professional CPA to confirm if this is something that you're able to do. But like I said, I have seen clients previously contribute purely through their profits earned from their deals.
And Michelle, can SDIRA funds be used to invest in short-term rentals? If I own 50% and I own 50, if the owner, I'm not sure what that means. If I own 50%. Oh, okay. If you own 50% and then the other 50% is not in the they own. Okay. All right.
Yes. So again, that goes back to our question, guys, of joint ownership, right? So yeah, you are able to own 50% through your IRA, and then someone else is able to own 50% as well. What is really important in this case is making sure the percentages are honored and met with the income as well as the expenses. And then you yourself making sure that you're not residing in the property. So that's another thing which we'll talk about a little bit more is just because your IRA owns the property doesn't mean you can go live in it. I get this question all the time. Donna, I just bought this beautiful house down the shore through my IRA. I can't wait to go like vacation in it. Unfortunately, one of those rules, prohibited transaction rules, is disqualified individuals cannot transact with the investment. So you cannot go into your vacation property owned by your IRA and live in it, even if you only own 50% of it.
Yeah, it's great. So many great questions. I feel like everyone just about asks some type of question, which I love. So continue on, Dana. I don't want to derail. Great questions and great strategic thinking.
I love it, Liz, because I think the best part of a teaching session is the questions, and I love that everyone is engaged. So keep the questions coming. And you guys asked some of the questions I was just about to touch on. So let's start with the first one. How do you use your own self-directed IRA in a deal, right? That is, how do you use your self-directed IRAs to get into real estate? What can you do with your self-directed IRAs? Now, first and most easiest and the simple thing is you can buy property or land and hold real estate directly in your IRA. So we are talking tangible real estate. We are talking real estate you can smell, touch, see, right? We're not just talking passive deals. The process is very simple, just like how you buy a house. You will figure out what is the property you want to purchase. Once you figure it out, you're going to let whether it's the realtor, the agent, or the title company that is involved in this transaction, that you are purchasing this through their self-directed IRA. They're going to tell you that's not possible, especially if they're not aware of this strategy, right? They're going to tell you, I've never heard of that before. At that time, you pull my team in, myself or my team, because we will be there to assist you. We work with title companies and real estate attorneys all the time, helping our clients get into purchase property. The purchase contract the settlement statement or HUD, title policy, draft of the deed, all of that. I'm sure you guys all are like, oh yeah, all that fun stuff when it comes to purchasing real estate. They all remain the same. One key difference. Now, the owner or the purchaser is not going to be Liz Faircloth. It's going to be Madison Trust Company for benefit of Liz Faircloth's IRA. The earnest money deposit is going to be paid by your self-directed IRA. All we need is the purchase contract and, of course, your retirement funds in your self-directed IRA. You will review the purchase contract, HUD, title policy, draft of the deed to ensure everything is in good order as you had discussed with the seller or the seller's agent. Madison Trust will review the documentation to ensure that your personal name doesn't go in, that it's your IRA's information. You will sign off as read and approved, and Madison will sign off on behalf of your IRA. Madison's signature or your custodian's signature, guys, that is the legally binding signature because this investment is purchased by your IRA on your behalf. Very important. We always tell clients, if you're looking to purchase property, give us a heads up because the closing dates are very important. Also, get us in touch with whoever you're working with on this purchase so that we can be in loop. We have a fantastic investments team at Madison Trust. They actually love to set up a call with the title company to just help them understand, hey, this is what we need. This is how we need it written in the purchase contract so that nothing goes wrong, especially getting purchase contracts and deeds drafted and redrafted and revised. Hell hath no fury like that. I've done multiple real estate deals to know prevention is better than cure. So that's first way, buying property and land. Second, and I think some of you touched on it before, lend money. You have options here. You can either lend money to individuals or you can lend money to deals or you lend money to groups. But you yourself can be a lender. When I say you yourself, your IRA, your self-directed IRA can be a lender. It can be short-term or long-term. How you go about this is, of course, you want to verify the person you're lending to, the borrower, is a trusted person or an entity that you can trust. Because the last thing any of us would want is our hard-earned retirement money, especially hard-earned raw retirement money, being lent to someone who will default on you, right? So the best case scenario is a secured promissory note and the collateral is real estate, because if it defaults, you have a tangible asset to fall back on. Most of the promissory notes that come through my desks are secured promissory note. What we request in a promissory note is, of course, the lender is going to be your Madison Trust IRA. Again, titling it always be Madison Trust Company, FBO, your name, your account number. We want to know the loan terms. What is the maturity? Is it 6 months? Is it a year, 5 years, 10 years? What's the interest rate? We always prefer fair market value interest rate. So if you're doing a $100,000 loan for 6 months, 40% is a bit steep. So we will definitely question that a little bit. So we always want you guys to be a little, check the fair market interest rates out there when you're drafting the promissory notes. And of course, how are the payments done? Is it interest only? Is it amortizing? Is it a balloon payment? All of this information, you have the flexibility to work with the borrower to create the promissory note at your terms. Madison Trust will not dictate the terms. We will not put restrictions other than the fact, hey, just ensure that there is a fair market value interest rate, which makes promissory notes really a very, very lucrative and in-demand asset class within your IRA. And of course, finally, invest passively. If you don't want to invest into real estate directly, because right now you might have just started a family. You don't have the time to manage the real estate directly, right? You don't want to deal with the hassle of lending money too, because it might not fit with your risk profile, but you'd love to invest passively and you're part of a group of real estate professionals that are deal makers and you have the opportunity to do so. You can join real estate syndications or fund has LPs, and we have majority of our portfolio is actually investors investing passively into syndications and real estate funds, because what they want to do is they want to invest with someone who has a fantastic track record and then forget about it. up until the time of retirement, and then see year over year how their investment grows. I am going to pause here because I feel like I went through 3 strategies, but quite fast.
Yes. And other questions, Marceli, hey, so a few things, because you're one of our new Strive members. I wanted to make sure you're getting what you need. Are lending money from there's certain ways that you need to do that. There's a lot of women in Strive that have done this. So as a community, as a network, tap them. From a resource perspective, I'm going to give a shameless plug here, but not a shameless plug. But I wrote some of this book with my husband, Raising Private Capital. It's published by Bigger Pockets. And there's a ton of information, case studies, Marceli, around not just raising money and looking for private lenders, but actually being the private lender. And so we included so many case studies in that book of how we built our own business and our own portfolio with lenders as well as LPs. So I want to share that resource with you. But in terms of women in Strive doing this and using this as a strategy, please tap them and tag me, because there's some really creative ways you can do it, both on a fixed interest rate and also giving your private lender a percent of profit of the deal. So, and I know, Dana, you have tremendous amount of resources as well. So that can't be answered in one answer. Any other thoughts for you about best practices lending money from the self-directed on your end from a custodian perspective?
I love everything you actually told, Liz. First things first is know what you are lending, right? That means what is the structure you're lending? Promissory notes, secured, unsecured. You mentioned sharing profits. That's a joint venture structure, right? So is joint venture better than actually directly privately lending? Know
Right.
what you're comfortable with. Then next step is the documents. The documents are key. I have received Word documents with 5 lines. And that is concerning because you're dealing with your money here. So always make sure your figure, and that's where the community comes into place, because there is a lot of powerhouses of women in the investor community who has done this and can assist there. With us too, of course, we are happy to review the promissory note to ensure that if it's something you're using with your self-directed IRA, we want to ensure that it is ironclad when we are reviewing the promissory note. So always feel free to use us as well, especially if you're going to utilize your self-directed IRAs. And disqualified individuals, please, please, please keep that in mind. We never want to be in a situation where you lent to a disqualified individual and your IRA account effective of 1st of January of that year ceased to be an IRA. So whenever you're in doubt, give us a call, because when it comes to retirement money, I always say trust but verify. So we are here as a resource.
I love that. And you guys really, really are. And that's critical. The other thing I'll mention too, Marceli, is that Beth Johnson is one of our pod mentors, and she wrote the book Lend to Live. She'll be teaching a pod on raising money, raising capital. So tag her. She's a resource too, that she literally built a business on private lending. So just to give you thoughts, people not talking about something they did 20 years ago, but people doing it now, Dana, right, is critical, because
it's so important
when you're vetting teachers of any kind or mentors, right? We're almost at the hour, and this has been one of the most engaged groups. I love it in terms of questions. Anything pending for any of you? And actually, as we end, any follow-up questions? I'll take one more. Dana, please share your information, the QR code. I want to ask a takeaway. One thing you're leaving with and one thing you're going to do, because that's the other part of it, is coming into something like this with an intention, leaving with an action step. We're not here to solve world's problems in 1 hour, but I wish we could, because would love that. But what we are in the business of is helping women take financial control of their lives one step at a time. It doesn't get done in 1 hour, but an action can get created and something can be completed as a result. That's what we hold for everyone. And that's what we're always saying, moving the needle in your business and in your life. So I would love to see takeaways because that's what we stand for. That's why we are here live with you. And this is not just recorded. We want to see the interaction. We want to see the wheels turning. We want to see, how does this apply to me in creating generational wealth? That's what we're in the business of, right? I know Dana and her team and what they do, and obviously with InvestHer and our partnership. So let's just see here. Thank you, ladies. This is so helpful. Good to hear, Connie. Michelle, calling Dana to set up an appointment to best figure out how, as a Canadian, I can help people invest using their SDR. That's a great point. Could I use it? Janine, could I use the funds from my self-directed to buy at auction in cash?
So this is where the checkbook control model comes into play, right? If your cash is with Madison Trust, we always need to be involved, which does sometimes slow down the process, especially with an auction. You need to have cash on hand. With the checkbook control, and hence why checkbook control, you always have the checkbook, right? You are able to, we do have clients using the checkbook control method for auction purchases. So that is something, Janine, you might want to take a look at.
Love it. Loving this. I'm always here, different ways to make money, and I'm so happy to be. Yes, we're so happy you're part of our community, Marcelli. Thank you again for everyone being on. This will be available as a recording. Madison Trust is one of our preferred partners, so they are here to be a resource and just amazing information, both on so many angles, being the one that has a self-directed or looking to work with people who have the self-directed, which I love that you guys come at it from so many different angles. So Dana, anything else from you? But thank you so much for your time.
Absolutely. I am very honored and privileged to be part of the investor community, Liz. So thank you so much. And thank you so much for everyone who attended today. I know there's so much more to talk about, self-directed IRAs, using it for yourself, raising capital with it for your deals. So if, like I said, I'm always open. I'm always available. Feel free to go to Madison Trust /InvestHer. You can use the QR code. You have my information there as well as my team. Set up a call and let's have a discussion, because at the end of the day, the more we can share the knowledge we have, the more we can all help each other to really get to that financial goal, build wealth. Because in this world, I don't think everything was built individually. I think it's communities that really build long-lasting generational wealth. And I'm so glad that I'm able to be a part of this too. So thank you so much.
Absolutely. Absolutely. And I'm going to just put the link here again to make sure everyone has it. Because once you go to the website, everyone, it'll ask you quickly, are you an investor or a developer? And I did it myself right after it. It goes directly to scheduling a call with you, Dana. So
perfect. Fantastic.
Thank you again so much for everyone being on. Do something with what you learned, and we'll see you next time. Dana, thank you again so much.
Of course. Thank you, everyone.
Bye, everyone.